So let's understand the real impact. I mean, what is the India connection? What will happen to the startup world? And I've got the perfect guest who understands both. Mr. Rajnish Kumar, former chairman of SBI and the current chairman of BharatPay, to understand the impact on the startup and connection for Indian lenders. Mr. Kumar, good morning. Thank you for joining us. You're in a very unique position, Mr. Kumar. You can speak about startups and you can tell us about the Indian banking sector. What do you want to start with first?
Yeah, I've been watching these developments and some of the startups where bank exposure is there, and quite a few of them may be using SVB services for their payroll. And one of the startup, they have clarified that they don't have an exposure on SVB, which was supposed to be a large investor. So in these circumstances, I think there will be quite a few which may be temporarily impacted. And as far as the startups are concerned, even before SVB has happened, the the outlook about their valuation amongst the investor and what to look for, that already has undergone a change. And now maybe it will again strengthen that outlook there, where the focus is now shifted, one about the quality of the governance, and second is about the potential to earn. And but sometimes all these crises, as they say, that there is a silver lining in every cloud. So this type of correction where there was a lot of the valuations were sky high, not related to the earnings, no attention to the corporate governance standards, accounting standards. So that will all get cleaned up. So it is not necessarily a bad thing. After every crisis, it can happen that the focus, which I am talking about. So with that focus, probably we will have a system where startups will be there, but some corrections which were required in regard to the business model and the parameters on which they are valued, they will undergo a change, or rather, already undergoing a change.
Do you see more like a winter for the startup world now? Because now, whether it is reassessment or re-examination or risk-taking ability at a global level, the question why not will be asked instead of why.
No, one is that the world in which today we are living. So this is driven by knowledge and innovation, and to the credit of the startups, and which you would have seen many in India, is their ability to innovate, their ability to find solutions to the problems where probably the legacy systems or banks or institutions have not done as. So in a scenario like this, the scope for innovation, the scope for building new business models, that's not going to go away. So I won't say it is a winter, but definitely when they get evaluated and the money gets committed, there will be much more due diligence around that. How will they be managed and what is their path to profitability once a minimum size of business is built up. During that phase, it is a given that there would not be profit, and that you have to treat as an investment. So first 2-3 years, there will be an acceptability, it will be an investment period, and what is your cash burn may not be as material a factor, provided the path to profitability and business growth is clear.
Hi there, good morning. So just want to understand for the banking space as a whole, what your outlook is, given the fact that we are seeing a lot of these uncertainties. What is the current setup according to you from the financial sector? Do you believe that we are likely to see some sort of a further clarity emerge? Are there any major risks in the system at the current juncture?
As far as Indian banking system is concerned, we have had enough of our troubles and with lot of pain and the support from the regulator during COVID period, the support from the government. The system today has emerged a much stronger system, and I don't see any immediate threat unless anything big happens on geopolitical front. Uh, Whatever the last year's performance of the banks has been, that is in the wake of the energy prices going through the roof, the inflationary environment, interest rates going up. So even whatever factors were there, if there is something which happens which is more shocking than what has already happened, then it's a different matter. But otherwise, the Indian economy and the Indian banking system has shown enough resilience. And going forward also, other than geopolitical risks, I don't see that there's going to be any major impact as far as Indian banking system is concerned.
Mr. Kumar, many believe that it would not be okay if one knew the interest rate trajectory, and it's only because the Fed is going on increasing rates that's why the markets as well see such a wide reaction. I want to just draw your attention to India because interest rates in India as well have shifted. Inflation is still high at 6.5%, and growth clearly is visibly slowing down. Where do you think the RBI would stop in your view, and what is the ripple effect that it could have on the economy?
Yeah. So it's a fact that the CPI inflation number is still above the RBI comfort zone. And there is the dilemma around the interest rate. So globally and as well as India, it has got accentuated because of the situation which has not developed in the US. So in these circumstances, when the next RBI MPC happens, this will be a big challenge. Right now, the movement in the yield on the bonds and the government securities that has been absorbed by the banks quite well. All the mark-to-market losses have already been accounted for in their quarterly results, which have been coming out. Even in March, I don't think that there is any going to be a huge negative MTM loss for the banks. Now the question is about that inflation. Yes, it continues to be high, but the real interest rates are, I think, in positive territory, and with the impact which may be there on the growth of the world economy, where our exports are linked, and as well as the growth of the Indian economy. So maybe I won't be surprised if there is a pause as far as the interest rate hike is concerned.
Mr. Kumar, there is a huge gap in terms of the credit growth and deposit growth. And typically when that happens, either credit has to come down or deposit has to go higher. Net, whichever way the puck would move, it will have an impact on profitability or NIMs of the bank. So do you think that the best of the banking NIMs, what we saw in Q1, Q2, Q3, that's over now?
Yeah, I think as far as NIM is concerned, they would be nearing the peak because there is always a little bit of a time gap when the loans get repriced and the deposits get repriced. And most of the banks, they have increased their deposit rates, and that impact will get reflected in their margins as far as the net interest margin is concerned. But for a long time, the credit growth was very subdued. So now if we are seeing a 14 or 15% growth, then there is a possibility that at least they will be able to protect their margins. The other thing is that the CD ratio for most of the banks, and particularly public sector banks, was very low. For the State Bank of India, I remember it fell as low as 62%, whereas the comfort level would be 70 to 70%. And there is still surplus, some surplus liquidity, not as much as it used to be in the system. So I think with say around 10% growth and 14, 13, 14% credit growth, there should not be a major concern, because 13, 14% growth is always on a lower base, and 10 to 10% deposit growth is on a higher base. So more or less the amount should match if that ratio is maintained. So now because the bank deposits, particularly the fixed deposits, have become attractive and competitive via other investment opportunities. So the banks may have a slightly higher deposit growth also. So I think I won't see that in the next 12 months there is going to be a major concern on account of this.
All right. Thank you so much for giving us that view as to what the fallout could potentially be on the banking system, on startups as a whole. That's the view coming in from Rajnish Kumar.